Hello, everyone. We're just waiting on our guest. When she joins us, we would begin.
Hi.
Hi. Hi, Edna. How are you doing
Hi.
today?
Hi.
So I guess we'll just begin then. Okay. Hello, everyone. I'm Chisom Eze, and you're welcome to the very first episode of Wealth Series brought to you by the Roadside Investor. And at the Roadside Investor, we are basically dedicated to educating individuals on investing, career development, entrepreneurship, basically anything that speaks to wealth creation, both directly and indirectly. And this wealth series episodes will be dropping on a monthly basis where we're going to be bringing people like Edna to educate us on different sectors or aspects of things that speak directly or indirectly to wealth creation. So if you haven't subscribed to this channel, you should do so. I don't know what you're waiting for. And for those that would like to have the recording after this event, it will be on sale and we'll share the information later so you can go ahead to purchase it and share to your friends and family. So let's just begin. Let me introduce my guest here, Edna Jennifer. Edna has a master's in finance and investment, and just recently she was awarded as one of the top LinkedIn boys in finance, I think in 2020, right? And that's a very huge achievement. Thank you very much for joining us, Edna. Thank you so much. Thank you for accepting our invite. So I don't know if you have one or two things to say to people watching before we then go into the discussion.
Yeah. I'd say the first thing I want to say is thank you for joining. And I think this is the most important part of, or at least this, one of the first important parts in your wealth creation journey is learning. You cannot outsource your thinking when it comes to finance stuff. Okay, give it to a finance planner or whatever. You need to know your stuff. And the best place to know, or one of the best places to start learning in a way that you would understand, is right here, right now in this session. So you should definitely invite your friends, anyone you know that would benefit from this session that isn't currently on it, invite them to join, and it promises to be a great one.
Yes, definitely. Thank you very much for that. I'm sure they are aware now that this is a good place to be and a good step to take as regards your wealth creation journey. So, as you can see, the topic for this first episode is basically investing in the US stock market post COVID. And it's safe to say that a lot of things have happened before COVID and after COVID, right? It's like a paradigm shift has happened for a lot of people. And that's why it's just important to actually talk about investing in the stock market post COVID. What has changed? Where do investors go from here? And things like that. So, to begin the discussion, I'm just going to just start with one question. And the question is, Edna, what's your outlook to investing? People have different reasons why they invest. Some don't even see the reason why they should invest. And as someone who invests, what's your reason for doing so?
Yeah. Okay, so there are a ton of reasons why people should invest. But personally, the reason why I invest is for wealth preservation and growth. So at the moment, I'm looking to grow the amount I've amassed from working, from different opportunities I've had to earn income. I'm looking for opportunities to grow that wealth in the long term and in the short term. So the reason why I primarily invest is to grow my money in simple and short terms, to
Definitely.
increase my money. Like it's like a side hustle at this point, right? Your investment,
Yeah,
if you have a good amount in it can be bringing you income every month. You can see your money grow literally every month. So at this point, it's just like a side hustle to bring in extra money with minimum effort on my part.
true. That's very key. Like at the end of the day, the reason for investing is to make money. Let's not even deceive ourselves here. And just to add to what Edna has said, like actually, if you're someone that is in Nigeria where our inflation rate is just always skyrocketing, and even if your sources of income are increasing with inflation, the value of the money you're making, it's like stagnant. So it's just important that your money is somewhere multiplying, working while you're sleeping, and because inflation is not sleeping, it's going to happen whether we like it or not. So it's just important that your money is somewhere. So thank you very much for that, Edna. And we've acknowledged that now that you invest and you have your different reasons for investing, or your one reason for investing. Can you let us know what your investment strategy is, or how would you define your investment strategy?
Sure. My strategy really seeks to increase the money I have in very simple terms. Seems to increase the money I have. If you've noticed or if you've been paying attention to the news, you would have heard that over the last couple of weeks, US stocks they've been dipping, prices have been down. Recently, over the last week,
Yeah,
cryptocurrency prices have been dipping. So, in that instance, my strategy is to reevaluate where my money is. Okay, so my money is in this stock. How is this stock doing? Is this stock making so much profit? Can I take profit out of here and buy more of this to reduce my cost here? So my strategy is basically to make money across board. And if I see one that's making money that I can use to help the other, that's creating a portfolio that helps each other to supplement. If I see one doing well and I can use that to supplement the other ones, I do that as well. So I can explain how this works later on when we talk about dollar cost averaging and all of that stuff. But that's generally my strategy. Strategy is to make money, and I use different tools at my disposal to do exactly that.
so in summary, from what I've gotten from what you said, you just diversify and also try to reduce your risk as it comes. If something is making you lose money, you evaluate why your money is there, whether you should move it. So basically diversification. And I agree with you, diversification is key, because especially when you're investing across board, risky assets, less risky assets. So when one is going up, you have one to fall back on. So that's actually very interesting. So the one thing I noticed when people were registering, because there was a box to input your questions, I realized that a lot of people were actually newbies. Not a lot, but like a good amount of them were newbies. And these are people that they just want to start their investing journey. They don't know what to do, what's the first step, the second step. And I wanted to address those people, right? Like, what would you tell them to do? Where should they start? And I'm asking this question because a lot of times when they ask people this, or when they ask someone this question, you always hear one thing: oh, do your research, do your research. So I want us to bypass that. What would you say in literal terms what they should do to begin their journey investing in the stock market?
Okay. Number one, don't invest in the hottest thing in town. So a lot of people have been seeing a lot of tweets saying buy coins, buy crypto, buy this, and then a lot of
Mm-hmm.
people have been jumping on this bandwagon. And I'm sure quite a number of people are currently losing some money from investing in Bitcoin. So
Mm-hmm.
don't just look to invest in the hottest thing in town. The first thing you want to do is to look at what makes the most sense for you, right? Do stocks, like, does the way stocks work make any sense to you? Does cryptocurrency make sense to you? Does this make sense to you? Think of each and everything and see what makes the most sense to you. For some people, the thing that will make the most sense to them are simple investments that can give you 3% every month guaranteed. If that's what makes the most sense to you, look for things that offer that kind of return. Now, when it comes to what makes the most sense to you, a lot of people chase after high returns. But you should always have it at the back of your mind that if you are looking for a lot of returns, if you are looking to double your money in a month, that means you are
Mm-hmm.
taking the risk that you can potentially lose all your money. Are you willing to lose all your money, or are you willing for like that potential future to actualize? Can you stand a future where you lose all the money you put in because you want to take the chance that you will double it? So some kind of investments can seem like a gamble to people because things like forex that people trade or cryptocurrency, all those kind of things, they are very high risk and they are very volatile. But that's where you can win the most. That's where you hear people saying, "Oh, I left so amount and I woke up to $1 million 2 years later."
Mm-hmm.
Those are the kind of places where people can make the most money. But those are also the kind of places where people can lose the most money. So remember at the back of your head that when you are thinking of what works for you, always remember that risk and return, right? Is this risk what the return I'm looking for? If I'm looking to double my money, am I going to be able to lose all the money I'm putting in? If that's not something you can take, then unfortunately you are not currently in a position where you can be making those kind of investments. So there are people that they can afford to throw 100,000 naira at something and see whatever it does, right? Because they've
Yeah.
grown their money to the point where they have a lot of money to play with, and then they can give a small amount to those kind of investments. If you've not gotten to that point, unfortunately, you can't be making those kind of investments at this point. So at this point, you have to look what makes the most return, but at minimum risk for you. So again,
Yeah.
it's not for me. I just think don't just look for the hottest thing in town. By the time something becomes the hottest thing in town, chances are it has already done like the best it's going to do, and there's no much
Uh,
upside to that. It's not going to increase that much. By the time when NFT stocks became super popular, that was when they were reaching their climax. And now most of them are 50% down. So if you had thrown your money
mm-hmm.
into that, you would have lost 50% of
Yeah.
your money like in 2 weeks. So
True.
but not that by the time something becomes the hottest thing in town, it's probably already at its peak and it's going to crash quite quickly. And two, look for what makes the most sense to you. And to for what makes the most sense to you, you have to look at these things in detail, which is the research everyone talks about. Because really, that is the
Yeah.
most important point, research. So you have to look for what makes the most sense to you. Look at your options. To know your options, you have to reach out to people or look for people in that space that talk about investment opportunities. Look at what are they talking about. They are talking about investing in fintech or investing in agri-tech, investing in all these kind of things, investing in crypto. Read all the information you can get about it. Which one makes the most sense to you? If you are reading about cryptocurrency and you don't understand it, then maybe that's not yet the time to put your money into it. Spend some time with it. Let the ideas remain in your mind and keep thinking on it while you put your money in less risky stuff that require like any effort to understand. So I think look for what makes the most sense to you. Think about the risk and the return. Are you comfortable enough to take that risk? And if you're comfortable enough, then get started there while you keep learning. So the investment journey is just learn, invest, mashed together.
Let's
And it just
together.
summarized in a single sentence which says be aggressive with learning and
Mm-hmm.
be patient or be conservative with investing. So you are very aggressive. You want to learn everything as possible, but you also want to be as prudent or just keep your money in a very safe position while you're doing all of that learning and investing.
Yes. And the what I would consider why I would like to even add to that is that a lot of things that destroy investors is FOMO, fear of missing out. So a lot of people just want to get in as it's hot, and they end up getting in when there's no potential to whatever it is that you're getting into. So it's very important that you try to identify when you're having that FOMO, and from there you can take that decision. And another thing to just add to what you said, Edna, because you made a lot of sense from understanding what's happening and doing what works for you. One thing I can say helped me was that, let's say, when I was considering investing in the stock market, right? And you know what people say, that there's nothing that beats experience. So even the little amount I had, let's say if you have just 1K, that if anything happens to it, you would nothing, you will still go with your life. You can just put it into a particular stock that interests you, and from there, when you know you're already invested in that stock, you start seeing things that you just start learning from there. Do you understand? Like, I just wanted to add that, like, so if you're really really interested and you want to start investing, you can actually start by, after researching and all of that, just put in a very little amount of money and just observe and see how it goes. Then from there you can start putting in more and more amounts of money. Very very nice one, honestly, very nice one that you've said, Edna. So
Yeah, that makes complete sense. There's a quote I read recently that just summarizes what he says, which is good judgment comes from experience, and experience
yeah,
comes from bad judgment. So whether you are choosing doing something wrong and like you've made a lot of mistakes and you've lost some money, you've gotten experience. And that experience is going to
exactly.
help you make good judgments in the future. So there is no knowledge lost. Losing the money isn't just like a complete loss. You built experience in the process. Good
Yeah.
judgment relies on experience to actualize. Right? So,
True. So people that, I'm sure you also get a lot of DMs, people asking you like, I have like maybe 100,000. How do I get 50% in 1 month? Because I know I get those DMs, and I'm like, from where to where? So it's a good thing that you
how?
mentioned the higher the returns, the higher the risk, because it's like people forget the risk aspect of it. So that's a very good one to note, honestly. So we both agree that everybody can agree that it's been a wild couple of months in the investment space, from the stock market, crypto market, everything had its own moments. And what are your thoughts on the recent events in the stock market? Would you say that the pandemic had a negative effect or a positive effect, or did it even have any effect at all?
Yeah, I'd say the pandemic led to a lot of things that caused the markets to just go crazy, right?
Mm-hmm.
So let's look at the events, how they occurred. So at the start of 2020, things were going normal. Stock market was moving quite slowly. Everything was just business as usual. Then February hits, March hits. There's a global lockdown. Stock prices dipped massively. Like some stocks were down almost 50%. Stocks were down, and it was like it was
Yeah,
a bloodbath.
was
And then
crazy.
what happened next? The Federal Reserve, the U.S. Federal Reserve, which is basically like the central bank in the U.S., it stepped in with bailout money, bailed out some of these companies, gave business loans, gave U.S. citizens some money, stimulus checks, all of that good stuff, right? And then some money just got injected into the market quite quickly. And then people started buying, stocks started recovering, and then people started
Yeah,
looking at tech stocks since a lot of people were at home. And then like a lot of things just happened in a very short time, right? So a lot of development that would have taken a while to happen just happened in a few months. Now, the
true.
thing with the market is, and this is something that Warren Buffett says, it's like when people are fearful, be greedy, and when people are greedy, be fearful. And that just
Yeah,
encapsulates what happened in the whole of 2020. So if you pick any random stock, say Apple, right? In the height of that 2020 lockdown, Apple was down like say 30%. But between that was like March, April, between then and I think September, Apple was down like Apple increased by over 100% in their stock price. So anybody that bought in that brief
imagine.
moment when everybody was fearful made a ton of money from doing it, even from Bitcoin. Some people think, oh yeah, Bitcoin increased from 10K to what it is today. But the truth is, in that April March period, Bitcoin was down to over $3,000. So imagine anybody that bought one Bitcoin at that time and held till now. So like the key thing with the market
Yeah.
is that market sentiment is quite iffy, right? And the thing with the market is that it's always screaming at you to do the wrong thing, right? When the market is going higher,
Mhm.
it makes you to want to buy. You're like, oh yeah, I need to get in. I don't want to miss out. And then when the market is going lower, it makes you want to sell, which goes against every freaking human logic. Because if the price of your phone is going down, if you don't need the money from that phone, you are not going to sell it. If the price of your house is going down, you're not going to go and say, well, I'm going to sell it now because the price
Yeah.
is down. No, that it goes against every piece of human logic. But that's what the market is doing. It's screaming at you to do the wrong thing. And that's really why, probably one of the reasons why people lose a lot of money in the market. But going back to the question of what I think happened in the entire 2020 until now. I think yes, the pandemic changed the market completely. A lot of people got extra cash, a lot of people got a lot of time. And then there was this news and people
Mhm.
posting their investment profits. Like a lot of these trading platforms like Robinhood and the rest, they were just positioned to tap into the market. So everyone was just opening Robinhood accounts, opening everything and just getting into the market and throwing money at stuff. And then with the few people announcing their wins, because I think there's a lot of survivorship bias in the stock market. A lot of people feel like most retail traders are making a lot of money, but I'm sure if you do the research, a lot of people aren't. But that's the story for another day. With a
True.
lot of people posting that, oh, I made $100,000 from stock market, you can do it too. It inspires people to go and throw in money in the stock market. So as more people
Yeah.
rush in and just keep piling on the amount going up, the stock prices rising, a lot of people keep piling in. That just lets the stock market rising as much as it did. And then as 2021 happened, okay, sorry. Another key element in the stock market or that led to 2020 situation is the fact that the entire investment space is like an ecosystem, right? So
Mhm.
not just about stocks, but there are other options people can invest in. People can invest in bonds, people can invest in treasury bills and all of those good stuff. But in 2020, the price of US treasury bills and US bonds they dipped massively because interest rates were low. Um, the economy
Yeah.
wasn't really moving that much, so the price was down. And then it now led some institutions like pension funds, mutual funds, all of those people to remove the money they had in treasury bills and all those things and put it in stocks.
Yeah.
So that also
True.
added to the increase in the price of stocks because there was a lot of money flooding the stock market. And then
Yeah.
now that the economy is opening back up, treasury bills are coming back up, bonds are increasing, you are seeing that there's a bit of sell off and all of that stuff. So I think a lot of
Yes.
things happened too fast and in a short period of time. That's what led to the massive movement we see in the stock market. And yeah, that's just really what's accounting for a lot of the things that we see
Yeah.
now.
So basically,
That
we
was
can't even say we can't even say there was a negative impact or there was a positive impact because while people were making money, of course, people were also losing money. So it depends on what side you're on. If you lost money, of course, you had negative impact on you. If you made money, positive impact on you. So before I go on, I just want to encourage people watching us to feel free to drop questions in the chat in the comment section. So if you have questions to ask, please feel free to drop your questions. So like we just acknowledge that a lot of things happen in the stock market, and personally I would say that traders most especially had a lot of them would have had a if they know what they were doing, would have had a fun filled um period with the prices going up, going down, because that's basically how traders make their money. But then there are people that consider themselves passive investors. They are not actively trading. They just invest and just look away. And then COVID came, and probably some of their stocks were just um, crashed, and many people were asking, should I buy more? Should I sell more? Should I increase my portfolio in an unrelated asset? Or like, what do we do from here? So, and a lot of people that were asking these questions were majorly working class people, students were also asking. And the funny thing is, people who were also looking to invest for their unborn kids were also asking this question. So I'm going to throw this question to you. And based on these categories I have mentioned, as a student, what would you advise a student looking to invest in the stock market? How should their approach be? What should their strategy be like? Looking at the fact that they are still quite young and they still have time on their hands to invest. So what would you say to that?
Right. So the first thing I would say is what you just said is that you have time, right? You don't need a lot of money to get started. You have time. If you do, if you study the principle of compounding interest and use compound interest calculators, you notice that even a small amount of money can become a large amount of money when given time and just compounding, right? So remember that you have
Yes.
time. Now, this ties into number two. Don't seek to do too much in so little time, right? So you've seen people on social media post, oh, I made okay, so let's even talk about the most insane of them all. The insane of them all is the guy that made over 22 million from GameStop, right? You've seen someone that turned
Mm.
$50,000 into $22 million, and you're like, damn, I need to do something like that.
Well,
Wild, right?
yeah,
Not a lot of people can do that. Most people do not make that kind of profit from the stock market. So when you see all these kind of stories, when you hear all these kind of announcements and stuff like that, know that those are exceptions. Those are huge exceptions. Sure, you can be an exception yourself. You can try towards that, but 99.99999% of the time, they are not an exception. That's
it doesn't
why they
work.
are exceptions to the rule. It doesn't work like that at all. So recognize that you have time
Yeah.
and don't try to do too much in too little time. And this don't try to do too much is quite a loaded point because it means that you don't need to be taking too much risk by investing in things that are quite obviously not investments, things that are Ponzi schemes from the way they look.
Yeah.
So over the year 2020, there were a lot of investment platforms that came up in Nigeria, for example, the likes of Pennywise, NBA Forex, Rasteli, and all of those interesting names, too many to mention, are just like fresh in your mind when you think of this. So the thing is,
Yeah.
when you are young, you don't have a lot of money, and then you're like, oh, how can I make this money into something much more? The thing is, time is a great asset you already have. So there is no rush for you to seek to double 20K to 40K tomorrow by investing in something that tells you, oh, I can give you 50% returns in 1 week,
Yeah.
right? There are some people that make this kind of returns, but no one can guarantee that they can make that return. So recognize that you don't need to invest in those kind of things. And if you want to invest in something more high risk, you probably want to do it yourself. Like you want to take that bet for yourself. If you're investing in a stock that is high risk, you want to be the one investing in that stock yourself. Because when you invest in all these forex trading or stock trading platforms that tell you, oh, you know what, we'll invest the money for you, but we'll give you 50% return in time,
Hmm.
a lot of them might not be able to achieve that. And if they don't achieve that, they might as well just take whatever is left of your money and leave, right? But if you are the one that invests it yourself and then stock drops, then that's all on you. So now that's one side of the argument. The opposite side of the argument is you have time so you can take risks. Now this is
Hmm.
counterintuitive to everything I've said, but
Yeah.
let me explain, right? So when you are young, you have at this point in your life, although it's hard to believe, this is like the least amount of money you probably have in your entire life. Right?
Hmm.
Going forward, as you grow in your career, you are going to be earning multiples of whatever you're having today. So I'm sure at the moment you're thinking, oh, whatever amount you've gotten like this is the largest amount I'm probably going to have, you are going to think that, oh, this is going to be the rest of your life. It's not. You are going to make a ton of much more money in the future.
Yeah.
So what can you do with the money you have? You can put a small portion, a good portion, into high risk stuff like cryptocurrency, like stock, and leave it for a while. Now, the key here is leave it for a while. You do not want to throw your money in, and then after 2 weeks, you see that Bitcoin has dropped in price, and then you sell and you run out. Where are you rushing to? Are you retiring tomorrow? No. So wait,
Mm-hmm.
calm down, allow your investment to mature. So when you take high risk things like this, you can afford a couple of years for the thing to mature. Now, if someone that's about to retire in a year puts their money in Bitcoin and then they see the price dropping, they might begin to get worried. But you
Yeah.
don't need money immediately, so you can afford to keep it for that time. So it's a healthy balance between taking risk and recognizing that you have a lot of time. So if you are going to take high risk, I recommend take the risk yourself. Don't go and put the money in a company telling you, "Oh, I am going to make the risk, take the risk for you and invest and give you 50% in such a
Yeah.
short time." A good number of the time, those companies are Ponzi schemes and they are probably just going to give you your money. If you are taking the risk, invest it yourself. Get an app that allows you to create stuff. Get an app that allows you to create crypto and buy it for yourself and watch it grow over time. And then take that risk for yourself. So if you want to outsource your investment, if you want someone else to invest it for you, then probably you don't want to go for high risk stuff. But if you're investing yourself, you can afford to go for high risk stuff because you have the time. So yeah,
Sure.
that's what I would say to a
That
young
was
person investor.
that was a lot. Words of wisdom everywhere. That was a lot, and I'm hoping that people watching can actually take time out to digest all that you've said, because those were just priceless. And I just even want to add to some of the things that you said, and this speaks specifically to people that, when they hear high returns, they're just really happy and they want to throw their money in. I usually tell people that, when I have this kind of conversation, and I always tell them that, can you explain to me how these people are making money? If an agri-tech company comes to you now and say, okay, they want to plant rice, and in the next 1 month they'll give you 50%, ask yourself at least, like, what's the harvest period for rice? Is it possible to plant rice, harvest rice, sell rice, and then get the money that they'll give to you as returns? So there's some things that, just putting your brain to work can actually help you prevent things like that, can help you prevent. And another thing, I think I got that from Warren Buffett, is that, people always want to have a lot of stocks in their portfolio. You can open someone's portfolio, you see like 50 stocks there. You'll be like, so you're investing like 50 different stocks. Like, you don't need to expand your portfolio that much. If you just have a few number of stocks in your portfolio that you truly believe in, it's fine. So you don't overwhelm yourself. And that's speaking to students, and just adding to what Edna said. You don't need to stretch yourself thin by investing in 100 stocks at the same time. Start with one. From one, start with two. If you even get to five, I think personally, I think that's okay. That's not too small. But that's just personally. So just one more thing. We've spoken about students. I think the next thing we'll go to is people that are working class, and that's a lot of people, that are in the working class, that are also looking to invest their money. You'll be shocked at the amount of people that are in working class and um, do not really understand how to invest in the stock market yet. So, can you also speak to that? Just the same way you spoke to students, let's speak to working class students, working class people rather.
Sure. So the first thing I would say to a working class person is create an emergency fund. Now, too often we find, because who is a working class person? Like ideally or usually they are people that are probably living on their own. They are not living with their parents. They take care of their rent. They take care of their feeding. They take care of most of the costs that they incur towards living, right? So the first thing you want to do is to create an emergency fund. And what is an emergency fund and why should you do it? An emergency fund is basically 6 to 12 months of your monthly expenses kept in like a savings account or just something that is very liquid that you can easily get the money out. So to get it, you basically just calculate how much do I spend in a month. So you calculate your monthly rent. I know in some countries, even in Nigeria, people only pay for annual rent. You only pay for a year's worth of rent or 2 years worth of rent. So what you do in that
Yeah.
instance is just divide the amount by 12 to determine how much you spend for a month in rent. And
Yeah.
then calculate how much you spend a month on food, how much you spend a month on transportation, and all of that, everything you need to spend a month. So when you get that figure, it's important that you do the math and you check your bank statements and everything you need to get this information. When you get that number, multiply it by 6 or by 12, depending on how much you want to save up, and start saving towards that amount. Right?
Yeah.
So you start putting a set amount towards it. So you determine how long can I keep can I like plan this thing to put the money in. So for example, let's say you spend 50K every month and you want to have an emergency fund for 6 months. That means you need to have 300K. But let's say for that 50K that you spend every month, you earn 100,000 naira. So the next month you probably don't want to just put all your 50K that you have left off into your emergency fund every month. So maybe you just start with 30K and then you spread it over very well. So you just start with little chunks and then start putting away in your emergency fund to have that stored. So the first thing you want to do is build your emergency fund. Like don't invest anything, build an emergency fund first. After you do that, or if you can afford to also do it alongside, this is when you start investing. So why did I say you should build an emergency fund first? We often find that a lot of people, like maybe they fall on hard times, and 2020 is a huge like example of this. Like you probably lose your job, you lose your source of income, your business is out, like there aren't people coming to buy stuff and all of that stuff. So when your primary source of income is dying or is completely lost, what do? The first thing people do is to run to their investments and try to get money out of it. And if they are
Mm-hmm.
invested in the stock market, chances are, for example, 2020, when a lot of people were losing their jobs, stocks were down. So if you had
True.
rushed to go and sell your stocks then, you could have probably sold at a loss and then you'd have lost some money that if you had just left
Definitely.
the stocks there for a while, you would probably like had made some profits along the line. So
True.
it's important that you have an emergency fund first. So in an instance where you are pressed for cash, you need money urgently, you touch there first before you look at your stocks. And that just helps you hold your stocks till they bring a profit. And it's just like so much better for you in the long run because you are not pressed to sell your stocks at a loss. You can take a comfortable position and then sell your stocks. And this is even beyond stocks like selling your house, selling your car, selling all of those things. If you had an emergency fund, you wouldn't need to sell all the things that you own already if you already have it. So first thing, have an emergency fund. Second thing, I don't okay, so I would say like a student look for what works for you, right? So a lot of people could say, well, the best thing you should invest in is buy some cryptocurrency, put your money in dollars, do this. The thing is, over a certain period of time, those things may not be profitable. So it's important that you do your research and find what makes the most sense to you. Should you be investing in stocks today? So now that stocks are down, I think it's even a great opportunity to buy stocks. So you're like, oh, is there a buying opportunity for this kind of investment? Yes, there probably is. So you could buy stocks. Or you can look at all these investment platforms like say PiggyVest, Carrier Effective, all of those good stuff and see what are they offering. Can I put some money in there? So you look to invest your money there, and then like just allow it to grow over time and keep investing every month. Keep investing every month. Investment is not an event. It doesn't happen one day
Well,
and well till the end of time. No, keep investing every month. Keep investing as soon as you get income or something like that. Oh, and then another tip for your emergency fund: when you get money you don't expect, throw it into your emergency fund. If you get emergency cash, throw it into your emergency fund. If you get a surprise cash, piece of cash, just throw it in there. It helps you build the money quickly. So, like, it's when we are in emergency situations that we think, ah, man, and then I had to spare 10,000 that I just wasted the other
Yeah,
day. I could have kept this money. So, like, to prevent thinking like that, just your mind is already doing the thinking for you that you should probably be throwing all the spare cash you get into your emergency fund.
yeah,
So do it. So yeah, then invest in things that you understand. Give it a lot of time. Investing is not an event. So probably you want to invest once every month or every quarter or every other month, every other week, just as frequent as you can. Keep investing. If you see that your stock prices are down, maybe that's an opportunity to buy some more stocks. You buy some more. If you see there's a new opportunity to invest on one of those investment platforms, you invest there as well. So just keep investing and keep growing the money you have in there. Investing is not an event, it's like a long term lifestyle.
true.
Yeah.
That's that's very key. Investing is not an event. You should just take that quote and just post it on your wall, on your wall or something, because that's actually very important. We actually have some comments in the chat box, but I think we'll leave that for after, just to answer the questions. So we've talked about students, we've talked about working class, and then there are the people that want to invest for their unborn kids, right? What would you say to them?
Hmm. I think when investing for unborn kids, like that's a very how would I articulate this? It's a very interesting ballpark to play with. So in that
Yeah,
instance, you can afford to invest in high risk stuff or low risk stuff or whatever, because you have like 18 to 20 years to your kid is going to need this money. That's if you plan to give it to them when they are an adult and all of that. So what I would say to someone that is investing for their unborn kids is that, number one, you have time. So you can afford to invest in things that are more long term. Like, where do you see the world going in 5 years? Imagine if you had invested in Tesla 5 years ago or in Bitcoin 5 years
yeah,
ago. So, with that kind of thing, you would want to have a forward looking mindset. So, you don't want to be investing in the hottest thing today, but you want to be investing in what could be the hottest thing in 5 years, what could be the hottest thing in 10 years. How can I position myself in this industry? Can I put some money in a startup? Can I put some money in a business, buy some stocks, all those kind of things, or buy currency or buy NFTs or all those kind of things. So you have a lot of time on your hands, so you can afford to settle down and do the research. There is no rush. You are
mm-hmm.
investing for yourself already, but you want to invest for your unborn kids. So for them, you can do research. Now, I read this article recently about someone that his grandfather or his grandmother died. I think you also posted about this on Twitter as well, that he left, I think, millions of dollars, like
So
$6
Apple
million
shares
dollars.
or something. I can't remember the amount,
Exactly.
but it
Exactly.
was
It was
crazy.
millions of dollars. It was a lot of money, right? So
Yeah,
at the time that person's grandparents was investing in Apple, that was like in the 1990s, when Apple had not become Apple. It was just like a small company. So
yeah,
when you are thinking of investing for unborn children, you don't want to be thinking of the hottest thing today. You want to be thinking of what will be hot in a couple of years. How can you think of this? So you look at government policy, you look at how governments are positioning themselves. So currently, one thing that you can look at is sustainable energy, sustainable tech, just sustainability, really.
mm-hmm.
You hear that, oh, by 2030, a lot of countries are going to be phasing out fossil fuel cars. They won't be allowing petrol cars and all of that stuff. So you'll be looking, what companies in those countries are positioning themselves for this industry? Can I put some money there? How much can I put in there? So you look at those industries and then you put some money there. I would say maybe you want to assign like maybe 50 to 60% of your portfolio to futuristic investments. I made up that name right now. That's not what it's called. Futuristic investments. And then maybe you want to put 40% things that you already know today. So you can put your things in companies that are already doing well today, say Apple, Facebook, Microsoft, all those kind of companies. So you're still getting some investments that you can get
Yeah.
some money from, you can sell, and then you can put in somewhere. So you have a cash cow, and then you have a potential star on one side and then the other. So while this cash cow is bringing some money that you can see to be consoling yourself that, oh, this future one is going to pay off someday, you can also be taking some
Yeah.
money to complement that investment along the way. So it's like an entire portfolio. But I think the most important thing is just you want to be looking at where is the world going to be, because you're investing for people that are not here yet. Yeah.
True. So, if you're on this episode listening to us and you're planning to invest for your unborn kids, you've heard all that Edna had to say. So you can start from there. Be futuristic with your investments. Try to have some investments in companies that are currently doing well. There are some companies that you just don't see how they will fail in the future. They are so strong that you just don't see them failing. So those kind of companies, you can also invest in them. And when you were speaking to working class people, something actually came to my mind. I forgot to mention, because one question we get a lot is, um, how do I know when to buy a stock, or how do I know when to sell a stock? And actually want to speak to that. And I also throw the question to you. For me, when people ask me, when should I buy or should I sell, something I read, I always don't remember where I read what I read, right? He said, he or she said that, let's say for example you have $100 worth of stock in Apple, and Apple is going down, Apple is really going down, and then you're contemplating, should I buy or should I sell? You can also ask a question that, if someone comes now and gives you that another $100, would you put it in the Apple shares you currently have now? So if your answer is yes, then you most likely have still feel that Apple is a good investment and you should hold it. And if you feel like, oh no, that I'm not going to put it in Apple, then maybe you should just sell. And I think that statement actually helped me, and I think it can help people on this call, especially when you're trying to deal with fear of missing out. Oh, I want to sell because it's losing. I want to buy because it's gaining money. You can actually ask yourself that question. I don't know, Edna, do you have anything to add to that? When people ask you, oh, should I buy now? Should I sell now? What kind of answers, or what's your answer to such questions?
Yeah. I think the answer lies in the why. So to that question, when you're thinking about that, you have to ask yourself why. Why is the stock
Yeah,
price dropping? Why is the stock price increasing? What is fundamentally changing about the company? Because think of this, for a company like Apple that's worth about $1 trillion, if Apple stock price drops by 10%, that means Apple is now supposedly worth $100 billion less.
yeah,
That's exactly what that means, right? So you
yes,
think, does this make sense? Like, did Apple suddenly become worth less $100 billion, right? Often you find that that's not really the case, because you find that
yeah,
sometimes people are overreacting, people are selling because of news, and then like a lot of things are happening. There's also the thing of manipulation, too long to talk about, but a lot of that stuff, right?
yeah,
So you have to ask yourself, why is the stock price falling? Does it mean that something has fundamentally changed with the company? So if, for example, you are looking at Tesla, and then Tesla stocks are dropping because 1, 2, 3, 4, 5 different companies have come in and said, "Oh, we're entering the electric car space. We have data to support self-driving and all of that." So that means Tesla might no longer be the market leader in that instance. So it's possible that the share price is dropping because people are seeing Tesla's market share reduce. In that instance, there's probably a justified reason for why Tesla shares are falling. And you probably want to start thinking of selling or getting out of that investment because something has fundamentally changed with the company or with that space. But if nothing has fundamentally changed, you probably do not want to be getting out of there. So if they tell you that, oh, Apple stock price is dropping because Apple Music, Taylor Swift says she's taking all her songs from Apple Music. Sure, that will affect Apple Music revenues, I guess,
Mm,
but people are
yeah,
still going to subscribe to their Apple Music, right? People do not just subscribe to Apple Music to listen to Taylor Swift. I mean, no offense to Swift, please do not come for me,
yeah,
but that's just really the thing, right? So you need to look at what has fundamentally changed with the company. If it's not something that changes really the company and their futuristic outlook, then you probably don't want to be selling in that instance. You probably want to be buying that dip and then seeing what happens then. And then beyond the company, you also want to look at the market environment, like the market, the industry that the company is in, or you want to look at the country as a whole. So, for example, in the 2020 pandemic, when there was a lockdown and prices were down, that was probably because people were seeing that, oh, profits might reduce for the year and it could affect companies in the future. And well, people were also scared and then they needed cash, a lot of reasons. So, in that instance, you know that that dip is probably going to have some recovery in the future. The question you have to ask yourself is, can I wait that long? Can I afford to wait to see how the companies recover? If you can afford to wait, definitely you want to buy that dip and then keep buying in that dip to see, like, to average down your cost. Now, for those who don't know what dollar cost averaging is, it's simply just buying something that's cheaper to reduce your average cost. An example, simple example is, for example, you buy Apple stock at 10 naira, $10 or whatever, 10 naira, $10, and then you bought one stock for $10. Tomorrow, Apple stock drops to 5 naira. Very unlikely, but example. If it drops to
mhm,
5 naira, that means that 10 naira that you had yesterday is now worth 5 naira. But then
yeah,
if you say, oh, let me buy one more stock, or let me buy, no, let's use one stock. Let me buy one more stock at 5 naira. So now you have two stocks at a total cost of 15 naira. But then when you divide that by two to get the average cost, that means your average cost is now 7.5 naira. That's 7 naira 50 kobo. But remember, yesterday you bought one stock at 10 naira and today you bought at 5 naira. So the point of dollar cost averaging is just to reduce the cost when the price has dropped. So you notice that you bought when the price has dropped, it reduced your average cost from 10 naira to 7.5 naira. So that's just like the idea of dollar cost averaging. When the price of a stock drops or price of something, you just buy more to reduce your average cost in that instance. So, and then I think with the stock market as a whole, patience pays more than rushing to take decisions like, oh, um, the stock market is dropping and things are happening. There's going to be a stock market crash and whatever. The truth is, if you are patient enough to wait it out, and if you have the time to wait it out, chances are you're going to make profit in the long run than ever before. Think of it. If you look at the S&P 500, for example, even in times where there was a market correction or there was a stock market crash, you notice that even if people bought at the highs of the market, if they waited a couple of years, 5 to 10 years, they will still be making profits. And then better off if you bought more as the price dropped, you would be making even more profits at the end of the day. So patience often pays more. And then when you're thinking of patience, you also need to think what has happened, why is this happening, and then based on the why, you can now decide if you should buy or sell. But typically err on the side of patience and then see what happens after a couple of months to years.
yes. Because time is fast spent, let's just go straight to some of the questions that have been asked. Um, Oloyede is asking, oh no, sorry, not Oloyede. Tobenna is asking, said, "Good evening, Chisom and Edna. With regards to saving money for like the emergency fund, is it wise to only save your money in banks, in naira, or use platforms that allow converting to dollars?" I'll before I go, Edna, I'd like you to give your thoughts on that question. Can you see
Do
the
you already
question?
have it? Yeah, I can see. You already have your answer. You can just go first while I ponder more on the question.
Okay, just to read the question again, because we talked about emergency funds, so he's asking, is it wise to only save your money in banks, leaving them in naira form, or converting them to dollars? And there are a lot of ways to look at it. I think when people talk about dollar, they fail to take into consideration the currency risk. If you're converting from naira to dollar, you're losing money actually, and that's something that that's beyond your control. You would lose money converting to dollar, and you will lose money converting to naira. So depending on how soon, okay, it's an emergency fund, so the thing is you cannot tell when you're going to use it. I was going to say that if you intend to keep it for the long run, then maybe the conversion can actually um the risk from the conversion will not be so much in long term. But if it's a short term thing, you're going to be losing a lot of money. So for me, I think for your emergency fund, I would say leave it in naira, because it's an emergency fund and you just can never tell when you're going to need it. So for converting in dollars, you can now leave that to the investing aspect of your portfolio. So you take extra step in investing in dollars while your emergency fund is in naira. That would be my advice to you today now. Edna, do you have what
Right.
do you have?
Okay, so I just want to add to what you said. When Chisom was saying that you lose money when you convert from naira to dollar and all of that, there's this thing called bid to ask spread, which basically means the difference between the buying and the selling. So let me put it in an example, right? Today, if you want to buy dollar, that is, if you want to use naira to get dollar, you probably have to pay say 480 naira to get a dollar, right? But if you want to sell a dollar to get naira, you probably have to pay 475 naira to get
Mm-hmm.
um sorry, you have to pay $1. That $1 will get you only 475 naira. So for example, if you do this entire circle in one day, this is
Yeah,
what will happen. You take 480 naira, you buy $1. That $1 you bought, you sell it to another person, you are going to get 475 naira. So you lose 5 naira in the space of just transferring the money from one currency to another. Because there's this thing called B2R spread. The person that is buying and selling you dollars, they don't make any money in the process if there is no difference. So that difference exists there, right? So that's something to also consider, and that's one thing I tell people that invest in or put their money in things like piggyvest, flex now, because you are like every platform has this. Nobody is Father Christmas. Nobody's going to give you the same price of buying and selling, right?
yeah,
Because they need to make some money in the process. So you need to decide for yourself if whatever you're putting the money in, or sorry, you need to decide for yourself if in the long run you see the naira depreciating further. If you don't see the naira depreciating further, then you probably want to keep it in naira. I think with the outlook of Nigeria at the moment, chances are the naira is probably going to depreciate further. So
yeah.
you might want to consider keeping a portion in dollars. Maybe not all of it. Keep a portion in dollars because the outlook in Nigeria at the moment with regards to their exchange rates and what the central bank is doing doesn't look great. So I think long term you can afford to keep some in dollars and then keep some in naira. In the case you have a naira emergency and then the exchange rate isn't looking great, you can just tap into your naira part. And then if you have a dollar emergency or like the exchange rate is looking good, you can tap into the dollar part. So it's just
Yeah.
a
The,
situational
the,
part.
the problem with emergency is that you never know when
You
emergency
never
will
know.
come. You can literally change your naira to dollar today, and tomorrow you will need it. That was why I even said focus on your dollar investment. You can invest in dollars, but that emergency fund, you just never know when emergency would hit you. So we have another question here
Wait,
from
and then
Samuel.
he was also asking about what platforms that allow converting to dollars. So for platforms that allow,
Okay.
there's Piggyvest, Flexner. You can use Piggyvest, Flexner. You can use Carrywise. They have some dollar mutual funds. You can convert and keep your money there. Then you can also keep your money in Rice Vest or Bamboo, all of those platforms. So if you want to know the
Yeah,
names of the platforms and see how they work, you can check. I have threads about them on my Twitter account, so you can just check JE_DNA. You will see threads in my
yeah. I
pin
think
feed
let
all
me
about it.
just put that in the JE _
J
That's her
underscore
Twitter
DNA.
account.
No,
So you
J
can check
underscore DNA. So let's
out
see.
here. JE_DNA. Yes, that's her Twitter account. And okay, someone here is asking almost the same thing. You talked about app to buy stock from. Which app can someone use that's reliable? There are actually a good number of them now. We have Bamboo, we have Chaka, we have Trove. The the question would be what platform do you like better based on user experience, user interface. There are lots of reliable ones, and so but just to narrow your search, you have Bamboo, Chaka, Trove, which other one, Edna? I think those are basically the when it comes to stock trading, those are basically at least in Nigeria. I don't know if this person is in Nigeria, but I'm speaking to Nigeria. So you can check them out. So there oh, our time is actually fast spent. We have like 5 minutes more. Let me just ask one question because um, about 50 people dropped questions during registration. But one question that really stuck with me is, please, can you shed more light on ETFs? And I think that's an important question. So, Edna, before I go, then I think you should go. Can you explain really, what ETFs are all about?
Right. So an ETF is an acronym for Exchange Traded Fund. And what an exchange traded fund simply means is that, as the name implies, it is a fund that is traded on the exchange platform, so like on the US stock, on the New York Stock Exchange, on the Nasdaq, on all of those platforms. It simply
Yeah,
means it's a fund that's traded there. So the question there is now, what is a fund? So a fund is simply something, a company, a business, or whatever that collects money from a couple of people to invest in whatever they set out to invest in. An example of a fund would be like the S&P 500. Now, what the S&P 500 does, which is S&P means Standards and Poor's, is basically a company that invests in the top 500 US traded companies. So what S&P 500 does is a fund that's traded on the New York Stock Exchange, which you can buy pieces of it. So when you buy a piece of the S&P 500, they take your money and they invest it in 500 companies that they identified as the top performing companies in the US in US public market. So that's simply what an exchange traded fund is, a fund that's traded on the exchange. Like that.
yeah, and I just to further break it down to what Edna has given us the technicalities on what ETFs are really all about. You can just take ETFs as a basket of stocks, and it helps in diversification. So rather than putting your money buying Amazon, buying Tesla, buying or everything individually, ETFs allow you to buy a basket of these stocks. So by the time you buy one basket or a portion of this ETF, you're indirectly invested or even directly invested in the stocks that comprise of those ETFs. That's basically all I'll add to what Edna says, and it helps for people that are low risk tolerant. If you're risk averse, ETFs might be a good way for you to actually get into the action of the stock market for starters. You will notice that sometimes when Amazon is maybe losing money, you check S&P 500, the S&P 500 is actually going up. So, and that's because of diversification going on in that basket of stocks. So I hope our explanation helps. Just one last question before we call it a wrap. And we might have some people here that are watching from outside Nigeria. So one here asked, can I operate a foreign domiciliary account from Nigeria without having to travel out and open? one. Edna, do you have an answer to that? Let's say the person is abroad and the person wants to maybe trade in apps like Bamboo. Do they have to come here to open a domiciliary account, or there's a way to actually go about it?
I mean, if you want to trade with Bamboo, for example, all you need is your BVN and a bank account, and you can get that set up. But regarding can you set up a foreign domiciliary account, that depends on the bank you're speaking to. So I'm sure if you can contact different banks, customer services, they can better advise you whether we have an option to give you that service or we don't. So yeah.
That was actually what came to mind because I don't think we can give you a direct answer. But I'm sure if you contact these banks, they'll better explain it to you. I think that's we've already our time already fast spent, and I just want to thank you very much, Edna, for um accepting the invitation to come and just speak to people that were looking forward to listen to you talk about investing in the US stock market. Um, if you guys don't know, Edna has a newsletter that has over 25,000 people subscribed. And if you want to subscribe to her newsletter, I think you can reach out to her on LinkedIn. Um, I think let me see if I can copy and paste your LinkedIn account. But aside that, thank you very much, guys, for joining us, and look forward to more and more series and episodes dropping on this channel. If you haven't subscribed, you should actually do that so that you would not miss out on um, our other episodes. And just to add, if you want a recording of this webinar, it's going to be on sale. I'm going to share details with you via email or on this YouTube channel. And yeah, that's basically it. I think I put your link in the description box. So if you want to connect with Edna on LinkedIn, you should do that. From there, you can sign up to her newsletter and reach out to reach out to her. All right.
Yeah.
Thank you very much, Edna. Thank you once again for joining us. See you.
Yeah, thank you for having me.
Yeah. See you in our next episode. Bye, guys.
Bye.